Again?
Thanks, Scott. Good to be here. Sorry I'm not there in person or live.
That's okay. We appreciate you joining us nonetheless. I just mentioned Esther George's comments that it's time, getting time. Bostic yesterday, others before that, and you may get more in the days ahead. The 10-year last Monday, 9 days ago, was 112. It's at 135 right now. Is that a problem for your everything rally call?
That the Fed could change everything. So it is one of the conditions that can turn into a headwind. And I would say the everything rally, there's a lot of pieces in place that really support a big move into the end of September. But absolutely, if the Fed does turn hawkish as a hawkish surprise, then the window in October is potentially some sort of pullback. But given the Delta variant spread through emerging markets in Asia, I would be surprised if anybody had confidence to say now was the time to tighten.
Well, let's be clear, though. So let's for argument's sake, or just for the sake of this conversation alone, in and of itself, the Fed chair goes to Jackson Hole. He starts to make it kind of obvious to people that the taper's coming. And then at the September meeting, which I think is the 21st and 22nd, or 20th and 21st, something right around there, then they actually announce they're going to start tapering. I don't know how far-fetched that is, but let's, for argument's sake, say that happens. So that ruins your call?
That has an impact, Scott. I mean, the magnitude of it, I think, is unknown until we know how much of a hawkish surprise it is. But between now and September 21, I mean, that's 6 weeks. And given the rise in rates and infrastructure and the fact that the right risk assets are moving, and I think even from a technical perspective, the DeMark count really essentially is recycling today. We have a pretty big risk-on move underway, and if the Delta variant indeed is peaking this week, which is what Dr. Gottlieb and even the IHME have forecast, there's going to be a real sigh of relief. And I agree with Joe and the others' comments that investors are cautiously positioned. I think people were looking for a 10% correction in August, and if we have a risk rally, there's a lot of chasing that's going to take place.
Yeah, the point you're making today is the key. You say today is a key. Can you be more specific for our viewers as to why they need to watch today specifically as the start for your everything rally call?
Yes. So, our original view was July, August chop. And then as the last week progressed, with Delta variant peaking and the 10-year reversing, and then the right groups rallying like China, Europe, casinos, airlines, we were getting the sense that we should be moving towards risk on. But today was important because Jim Cramer on CNBC had last week flagged the potential 13 sell setup in the S&P. It's a DeMark system, and I'm a big fan of Tom DeMark and the DeMark analytics. And the 13 appeared on Thursday. And if the market has to respond within 4 periods, the day 4 is today, Wednesday. So unless a sell-off starts today, then it's likely a recycled 13. And what that usually means is instead of a sell, there's a larger trend underway. You have to zoom out, and this larger trend is actually a big risk rally. The typical move is something like 7-8% over 3 months. So this is something that could push the S&P towards 4,800, before October.
Yeah,
I think it's a big deal.
Yeah, you do admit yourself, though, there are a fair amount of risks to your own thesis, and I think it's worth noting that for our viewers. Any number of things could happen, be something unexpected with the Delta variant, or certainly the Fed. And, I don't know what the baseline is at this point where it's moving, but the speaking is definitely more hawkish. The idea that tech can continue to go up, even if rates continue to go up, that doesn't worry you at all?
I think there's going to be a break point, Scott, where a level of rates is going to cause consternation. But, in our sort of central case, tech has a big catch-up trade to make because you look at Amazon up 2% year-to-date, Apple up, barely 9%. S&P's up 18% year-to-date and could be up 25% for the year. I think a lot of risk on capital, money that's been on the sidelines, is going to go into FANG. Apple, Amazon could have a 20% move into year-end, and that's big enough to make them an overweight. So I think it's an everything rally that takes everything up. But you're right, nothing's a guarantee. If we hit a certain level of rates, I don't know what it is, people are going to start to do the DCF analysis and say, get me out of growth.
Yeah.
And that would turn into a rotation trade. But right now, I think it's a risk on everything rally.
Tom, I'm going to make that the last word. I want to kick some more stuff around with my crew, but I appreciate you joining me.
Great. Thanks for having me.
All right, we'll talk to you soon. That's Tom Lee of Fundstrat. So, Joe, he's not the only one that thinks